calmed down, right? It seems to be high validity is the world coming to an end. Expect volatility, but we've seen it before.
Yeah, I am in agreement. Let me just make sure this is on the right one.
Quite a coincidence, the Barron's study, don't panic, survive the volatility, but for the long term, things are still looking good.
Yeah, so I would anticipate 2019, right? That was kind of like the close of last week, what we talked about. Anticipate 2019 to be something. Before you guys came in, I was discussing with JC and Chris about this chart right here. I posted in the group chat as well. This is the S&P 500 or the SPX index, and yeah, it's a forecast from a credible person at least I find credible, who is actively putting in effort to understand the markets, right? So I like to listen to other enthusiasts or hobbyists or whatever you call them, and so they're seeing the neckline. They're forecasting a potential head and shoulders. Yeah. So with the right shoulder, I'm in agreement along with Felix Zulauf, the billionaire. The Switzerland money manager, I forget. Everyone's kind of saying 2019, 20 to 30% pullback in equity markets or stock markets. So that's kind of where I'm at. So if we were to pull back to 20, 30%, then it'd be probably somewhere here, right? That's what I'm seeing with the current market action. Again, we were just saying that there were two volatility events, one here and the second one right here, right? So this is where we are currently at today. I know the environment sucks for momentum traders, which is myself. Right? Momentum trading is probably one of the easy type of trading where you kind of sit back, but now it's an environment that favors Chris's style of trading.
Could you go back to that picture for a second?
Yeah.
So that upswing, that neckline,
this one right here,
support back up to the upward. So what's the spark that makes that move in such a positive way back to near record highs?
So we were just kind of discussing this because some people I talked to, they would have like a complete bearish view and there'd be like a breakdown and go down further. Though looking from the previous bear markets or great recessions, 2000, 2008, a downturn is a very process-driven type of thing. You're going to see a lot of rallies before it goes down. It's going to be up and down, but going down, if that kind of makes sense. But you're asking why the crazy rip to the upside? Well, I was telling them like beyond the US markets, right? Looking at global macro, if you look at European markets, the DAX and the Stocks 50, the top European stocks, they're all pointing down. So the European markets are pointing down. So there's a lot of stress there. You look at Asian markets, particularly Japan, Japanese Nikkei index, that's also pointing down. So at the same time, Asian markets are pointing down, European markets are pointing down, dollar is pointing up. So I'm sensing that, okay, they're transitioning out of these major indices and running into a safe haven currency, the dollar. So if they're in the dollar, then one last push up for the stock market might make sense, because if you're in, dollar currency, you might transition to dollar assets. So that's kind of like the global macro assumption that I have, the mechanical assumption I have in my head. And also dollar will continue to rally. Why? Because interest rates are going up. So there's incentives for, let's say, large money managers in Europe and Japan, right? They speak different languages from us in Europe and Japan, but they are the same thing in terms of money management. They are managing value for people, right? And so they're always looking for the next higher yield or next higher performing asset. So if they see that the dollar is rallying and interest rates are going up, causing the dollar to further rally, then it just might look pretty attractive in like a global, scary downturn. So that parabolic move to the right shoulder right there, the assumption is that the rest of the world will run to the U.S. economy. So learning all this makes me really feel, I guess, a bit more proud to own like U.S. dollars and assets, just because like you kind of see like how the world works, and how like just naturally through fear they run to like a particular asset class. Now, when we don't, I also notice that when money managers don't agree with like the U.S. government, they run to gold. And so we are, in the previous sessions, we talked several times about our increasing debt in the government and our increasing assets, the treasuries on the Federal Reserve's balance sheet. Those two are increasing to unprecedented levels. And so it's kind of like these are the two foundations of like the two pillars of monetary policy or just money in general. And if they don't hold up, if we keep on devaluing it, and we're going to talk about that today with China, we found out some fraudulent stuff happening in China off of that interview. But if they keep devaluing the system, as we discussed last week, then what can we invest in that holds value? Something with limited supply, right? I think the thing to think about is if the government keeps increasing the supply, of currencies, then if we're in the dollar, if you're holding dollars, that means you're not in stocks. So you got to think about, it's all about positioning, right? You're either in stocks or you're in dollars. You're either in real estate or you're in dollars. You're either in, I don't know, sophisticated art or you're in dollars, right? So let's say most people don't invest. They're in dollars. And they're devaluing the dollar by printing more money. So what happens? Those asset prices, or homes, stocks, real estate, they go up, but the dollar value goes down. So you need to get out of position of the dollar and get into an asset position that's going up, right? But now that the dollar is going up, well, then it's kind of headwind for your asset position, so you might want to get back into the dollar. Now, that's talking between dollar and like an asset, right? But now, how about dollar and gold? Gold is fixed. They can't print gold. But currencies they could print. And we print because, we need to manipulate the economy a little bit when in times of like Great Recession and stuff. So we know this game is manipulated from a very macro level. But I think, out of 7.6 billion people in the world, how many people know that the system's manipulated? You're born into a world kind of like thinking like, oh, this is the way to consume, this is the lifestyle, this is the path. You never challenge reality, right? But now that I study, global macro and politicians and sovereigns and all that, I start to see that, dude, they're at a level where they're controlling this crazy money supply. So in a way, that kind of equips me to become a better money manager, hopefully. But I have a different perspective now. That it's just, if you recall the pyramid chart that I drew, at the bottom is retail, average Joe. We could redraw it for new people that came in here. I love to redraw concepts just because they're so valuable in my head. Because a lot of times when I think about things, I just quickly go back to the framework. So this is the framework that I have in my head, right? At the very bottom is like the average Joe, right? When you listen to earnings calls, corporations all the time, they categorize this as retail. They'll say retail or consumers. They define them as that. It's strictly objective. Oh, what do the consumers think? You'll hear that in corporate earnings calls, which is extremely interesting. Now, if you take it a notch up, right, which we analyzed in, for example, bizbuysell.com, we're looking at SMB businesses. Well, that's where small to medium-sized businesses hang, right? The reason why this concept, this framework is so important to me is because you always, just as much as you need to know what positions you're in, you also want to know like what market segment you're in as well. Hey, Maureen.
Hey, how are you?
Hey, it's been a while, huh? We used to be at the Milpitas Library.
Well, that was a little far for me.
Yeah, so we're here now. So welcome everyone. It's been a while. Right now, guys, we're just talking about market segment and how like you're either in the position of a dollar or you're out of the dollar and you're in some asset class. But we're just talking about the manipulation of the dollar and how sovereigns are able to do that. So if you look up a little bit higher, right, why do I look at this? Because it's different balance sheet size, right? The average Joe, average retail consumer, let's say they got about 50 grand in their balance sheet, in their cash account, right? You go to SMB, it's a little bit higher, right? What's the average spending of a retail person? Let's just say $5 on coffee, $1,000 on an iPhone. You go up to SMB, they spend easily $5,000 a month on marketing. You see what I mean? It's slightly bigger consumption. It's still consumption, but it's a different level of consumption, right? We go a little bit higher, we get middle market. Middle market I classify as companies like logistics companies, where they're not really doing small to medium-sized business activities like a cafe or a real estate agent. Well, I guess real estate agent, but let's say middle market like logistics, pushing trucks and stuff, moving things around, commodities and such. Their deal size are probably a lot bigger, up in the millions. And then on top of that would be enterprise. Now, for the longest time ever, I thought enterprise was the highest until I started understanding global macro more, understanding interest rates, bonds, currencies, and all that, gold, oil. It gets a lot higher, right? So in the enterprise space, which I love to sell in, that's my day job. I sell software. right, for enterprises. Within the space, you could divide it into 3 tiers, or 2 tiers, whatever you want to call it. SME, small to medium-sized enterprise, and then they don't really have a name for the upper enterprise, but let's just call it, I guess, upper enterprise. Upper enterprise would be like an Apple, Facebook, Amazon, Google. You're doing deals between those guys, and those deals are huge, right? SME, we could say maybe like a startup like Uber, right? It's enterprise, but it's a smaller enterprise, right? So I thought for the longest time that they were probably the biggest out there, until I found out that the sovereigns actually control a lot more money. Their balance sheets are huge, right? Because over here, well, it's hard to say because Apple is probably the equivalent of like one of the sovereign funds out there. If I recall, the Norway sovereign fund has about 1 trillion in assets under management. Apple is about 1 trillion in value, right? So it's a gray line, or this area is between enterprises and sovereigns. They could switch between. You know, you could have like the Prince of Malaysia, who's a lot smaller, the sovereign of Malaysia, who's a lot smaller than Apple, let's say. So it switches around, but those are like the top level guys that I see out there. And so today, this is why at this level, it's so important to talk about gold, Forex, currency devaluation, interest rates, bonds. That's what they deal with. That's what they invest in. So that's the framework I constantly carry in my head and move forward. Whenever I go out there and I do a deal or I transact in something, I know where I'm transacting at. And I know who's transacting below and above me. It just helps. So right now we're seeing, let's repeat this chart real quick. This is one of the forecasts that I found from a very credible, I guess you could say, investor. That's in alignment with other money managers are seeing. This is not wave theory, right? We could look at the wave theories as well, Tony Caldero, objective wave theory, but he's projecting that, you know, midterm is downtrend, long-term is probable downtrend, is what he said. But this is what I'm saying. The markets right now are hanging out somewhere around here. I think we could get one more push to the right shoulder. Reason being is what I mentioned earlier, global macro. Markets around the world, European markets, Japanese markets, they're dipping hard, or they're pulling back, and you're seeing dollar rally. With interest rates going up, more incentive to jump into the dollar, right? So if they jump into dollar currency, then they'll jump into dollar assets. That's the assumption that I have for this current economics right here. Did you guys have any questions on that? S&P 500. This is the S&P 500 daily chart. Yeah. Okay. Well, let's jump into today's session, guys. Let's see. Did you guys expect anything today? Just out of curiosity. Like we got some, you know, returning faces, new faces and stuff. But any questions before we start?
Well, I think this is like the 5th time I hear about head and shoulders. So everyone expects head and shoulders.
Yeah.
Which kind of probably it will not happen. Because everyone will get position. I'm not talking about kind of the lowest 2 levels of the pyramid. They don't matter for the market.
They're smaller, right?
Fund managers, kind of big money movers.
Yeah.
They kind of all expect head and shoulders.
Yeah.
Or a lot of them don't, right? A lot of them are selling buy the dip, are gonna go to new highs. There's not
That's what they tell you.
Yeah.
You should kind of, what they tell to their public and what they actually do, their action, there is divergence.
Yeah, but what I'm saying is a lot of them don't expect it. They expect the new highs, and some of them do, and some don't. I'm saying not all of them are expecting this head and shoulders. A lot of them are expecting brand new highs and bull market ahead in 2019.
I'm not hearing that.
I am.
I'm hearing bear market.
If you look at CNBC, everybody's saying, you know, buy the dip, this is a good
That's
time to
what they
buy.
told to
The
average
stocks are being
Joe.
down, you know.
Look, okay, so
That's what they told to the average Joe to kind of sell him at the right shoulder. That's kind of the game we play last 200 years.
So look, if you got a financial advisor, you need to gauge the experience and age of that financial advisor. Well, sure, I'm pretty on the young side, but a little bit different maybe. There's always that tug of war between bulls and bears, right? And I feel like the newbie ones, or I don't know, the more fresh ones, they're just buying the dip because they want to grow portfolios. Think of the incentives of a financial advisor. They just want to collect money. I was on that side, right, for like a year. They just want to collect money, grow the portfolio, and charge a fee, and preserve the portfolio. They don't want it to go down either. But if you don't understand global macro, I feel, and sovereign balance sheets, then I don't know. And on top of that, interest rates too, right? And we looked at all of that, and we confirmed that our balance sheets, government balance sheets, and Federal Reserve balance sheets, Federal Reserve has too many assets, too many treasuries. They accumulate too many treasuries. They need to offload that. And governments, they have too much debt, and they need more money, right? Congressional Budget Office, forecasting more money needed. So there's this increasing tightening in the economic system. Now, that tightening kind of reduced recently with oil going down from 70 to 60. Because if oil goes up, it's more taxing on the economy. To move around, it costs you more, right? But it went down, so that's releasing the bubble a little bit. But there is a bubble, I feel. Or at least like a all asset class inflated type of bubble. Now this is just my analysis. We look at many different angles, right? I'm going to bring up wave theory one more time because I remember Maureen was interested in wave theory. I kind of outsource my wave theory to this gentleman named Tony Caldero. You can look him up. This is his website right here. But what he does is his form of Elliott wave theory is objective Elliott wave theory. And every week he posts an update about what they see in the markets, right? And for the longest time, it's been saying uptrend, long-term uptrend, long-term uptrend. And maybe like 2-3 weeks ago, he finally put downtrend probable. Before that, it was like downtrend probably underway, right? Midterm, he finally confirmed midterm trend. He finally confirmed downtrend, right? And this is through his objective analysis. And then short term, little comment on that. So that's what we're seeing from his Elliott wave theory perspective, our own S&P 500 analysis, our own like fundamental underlying analysis, and that's pretty much it, right? If we pull up the S&P 500 again, this is our analysis over here in this meetup, right? We went to about 13% correction because my 10% correction line's right here, right? My green line is open for the year. What did we start off 2018 with? Now, we were below it for a brief period. We're right back up, which is good to see, right? What does that mean? We're positive on the year now. we went slightly negative on the year, which is bad, but now we're positive. And so last week I mentioned that, what do I think about the rest of 2018? I think we're going to be flat on the year, right? Where we're not going to be up a lot, or not going to be down a lot. We're going to be flat. But we're going to see increased volatility in the next year, right? Looking at that picture that I showed you. I'm going to bring it up again just because we have a few new faces.
I don't believe any of this.
Yeah.
I mean, that graph that you have, that last one.
Yeah.
If you just put the graph of with where you have that blue line, the other one.
The blue line, you're talking about?
What that suggests is going up, then down, up, and then down and up. But if you look at that exact pattern in 2016, I mean, why didn't that follow the same kind of shape? I mean, it seems impossible to say that it's going to repeat any kind of pattern.
Yeah, so let me redraw it from backwards, right? What you're seeing is something like this. You're seeing this, 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 this. You notice how I drew it like that? How I just consolidated all this right here? So this line is just saying that it's going to go like this. You see what I mean? It's not 100% defined. It's just, that's where it'll chop up and then chop down. I think you were defining it as it'll go straight up like that, but it'll chop like that in that direction.
I think what he's basically saying that we had previous Head and Shoulders before and they never materialized.
Yeah, 2015
So
probably.
Look at that
why
girl
is
right
this
there.
one gonna do it?
It's almost the exact same shape, right?
Yeah.
But it didn't go down, it went up, and, so how, unless there's some event.
So
what-
the
it doesn't
underlying.
seem like it just naturally happens on its own.
So that's the chart, right? The technicals. The underlying of that is we're looking at the balance sheets of like the government and the Federal Reserve and how they're pulling liquidity out of the markets by selling treasuries, right? So they're raising interest rates. They're making the environment a lot more harder for people. So if you're raising interest rates, remember how I said it's going to be headwind for home prices, right? Because your mortgages are going to cost a little bit more. Corporation borrowing is going to cost a little bit more. So the expense profile is going to go up. If that expense part goes up and your sales is constant or not growing, then you got lesser margins. So it's slowly forming, right? Now I can't tell you exactly it's going to go down. I don't know. I wish I knew. I at this point I don't care. What I realize is that I just want a solid, smooth environment for momentum trading.
So wouldn't you be concerned that...
That's all I care about at this point.
So wouldn't you be concerned that Apple and Amazon both put out reasonable revenue and earnings results, but both guided caution for the holiday season. That
So-
doesn't seems like what you would have expected them to say this would be the best holiday season ever and so on, but it was the opposite.
Yeah, so let's jump a little bit ahead. Let's talk about FANG stocks before we talk about this. Okay, so let me tell you what we're gonna talk about today. We're gonna talk about China, we're gonna talk about Bitcoin, we're gonna talk about gold, and one stock that I'm extremely bullish on. And then gold, why I'm bullish on gold, right? And then Bitcoin as well. Bitcoin's kind of on the move as we speak right now. This morning it was kind of red, but now it's kind of on the move. There's been increased chatter among money managers about Bitcoin.
And Bitcoin Cash, right, or whatever they
Just
call it.
Bitcoin, or just cryptocurrencies in general. So if Bitcoin goes up, the entire cryptocurrency segment's gonna go up. Now, I don't know if you're gonna invest or trade it. I'm gonna trade it. And I'm gonna try and maybe invest some for like a little bit longer. But I'm just gonna capitalize it to get more dollars into my hand, so that I can go put it into more secure assets. It's just allocating money. But that's what we're gonna talk about. So let's jump ahead to what you want to ask, right? You talk about Amazon, FANG, or FANG stocks, Facebook, Amazon, Apple, Netflix, Google. Let's talk about Apple. Apple had earnings this week, right? Did you notice that they're saying that they're gonna not talk about unit sales, iPhone unit sales anymore? Why would you do such a thing? You know, that's something you want to brag about when it's good, right?
Because it's not good.
Because they sell less.
It's not good, and there's a lot of reason why, right? I'll read my notes, but understand that technology is getting cheaper every day. How much does it cost you to get like I don't know, 1 terabyte of like access?
Right, no, it seems like refresh rate
So-
of phones is going down.
So phone prices are going cheaper, yet they keep charging a higher premium because they got this marketing leverage, they got the audience, right? But how far can the price of the phone go down? Like, you know, Samsung selling their phones for half the price of Apple, let's say, and Apple's just selling at 1,000. They can't sustain that high price.
Right.
So I think it's rubbing in, and we're seeing that.
And I think Apple's recognizing the potential problems with China tariffs that are gonna be evident after the elections. So they're uncertain what's gonna happen, they have to address it.
Yeah. So yes, they did really well on their earnings, but they charge higher prices on their items. You know, we don't. Let's say we were to be a critical investor. Do you care about higher prices? Yes, but I think you care more about the units sold. Also, right? Those are two critical. I mean, actually, they go hand in hand, to be honest, right? So in the coming time, moving forward, I think unit prices will go down. Can they sustain their premium? So let's just kind of analyze the price of a phone real quick, right? Let's say, let's see if I could draw this correctly. Let's say the cost of the phone is it's about 40% margin, right? So let's say it's 600. Let's say the phone's 1,000, right? So 600 is what they cost them to make, and they're selling it at 1,000, so 1K. So they make $400, right? But the issue is not can they justify the cost to make is 600, but this 600 is going down. So if the cost is 600, it goes down to 400, let's say. Can they justify a $600 premium? It's going to hurt their premium. The premium is going to get shaved off the top too, is what I'm saying. So there's two factors, right? The premium and the cost. The cost is on the way down, just because technology disrupts technology. Technology is constantly getting cheaper, right? I have like a supercomputer compared to 1990, whatever, right? Like in this room right now. We all do. And we have it in our pockets. So if the technology keeps getting cheaper, can they keep justifying that premium? It's going to be crazy if they do. If they do, that's, wow. Like we're like a bunch of irrational buyers. But you guys get what I'm saying with this? How the cost of the product is going down, but they keep charging a higher premium. I think the premium will rub in. So now I took some notes here, right? That sounds bearish for Apple. They're not showing their unit sales anymore. You know that the unit sales, the iPhone sales is like 60% of their business. They're not showing that anymore. But I think they have a lot of money on their balance sheets, right? So if they have a lot of money, then it's going to be prime for them to look for growth. So I think Apple's going to be spending quite a bit on acquiring companies like Yelp. If you guys recall my bullish reason for Yelp, right? It has integration. Okay, moving forward, I personally feel at this point that it's going to be a more software-focused investing game. Hardware too, but hardware will kind of max out. Now, we have engineers in here probably, and you guys would definitely challenge me on that. But let's talk about ASML, or applied materials. How much smaller can you get your material, your things, if anyone could comment in here? Or how much smaller and better? Is that a correct statement, Chris?
Yeah, that's not the game anymore.
The game is software, would you say, or I don't know. What's your
No,
take on it?
No, they have to do different things now.
Mm.
They used to go on Moore's law, and that used to be simplified into the number of transistors that can fit in a certain
Yeah.
area. But they have to do different things right now to try to,
Yeah.
like, go vertically, like go in 3D in the chip, and things like that. You know,
Huh.
they have to go through different.
I see.
So it's not doubling transistors much anymore, because
Yeah.
they kind of reached the limit of that.
Yeah. So Raj online, he's in Texas now. He used to come to our meetups. He just mentioned that he just sent out this picture to us. So super accumulation happening in Bitcoin at around 6,000, 6,500. As we speak right now, I feel like Bitcoin's kind of on the move, where it might not revisit that low. We could look at it in real time right now, because it's kind of trading 24/7, right? So we're seeing a lot of greens. In the past 2 weeks, 3 weeks, I spoke with Raj. We transitioned our position out of Ethereum and moved all into Bitcoin, just because Ethereum doesn't have a fixed supply. Bitcoin only has 21 million. 21 million units for a global population of 7.6 billion. That's not going to work. So, and this is a great safe haven asset, because governments around the world are printing money. The only one that stopped recently is the US. So if everyone's devaluing currencies, you want to be in something that's fixed, right? I would assume. Like a real estate. A property is fixed. So that's a good asset class. But there's a major risk with Bitcoin. But we won't go too far ahead. We gotta follow the schedule. But yes, Bitcoin's on the move. Let's see. So let's start with Facebook. Facebook from the highs right now, 30% down. Right? If you guys recall me saying that if the index is 20%, minus 20% and above, or and below, whatever you want to call it, then money managers will start transitioning to a very bearish outlook, right? So in college, one of the professors that taught me, his name was, I forgot his name, Frank Jones, if I recall correctly. He is a money manager, a wealth management manager of 800 million for a company called Private Ocean. Private Ocean's here in the Bay Area. Not advertising for him or anything, but he taught me the same concept. Greater than 20% bear market. Now this gentleman had white hair, so he's a lot older, and that's kind of like the I guess the indicator for him. And we kind of back test that in 2008. If you see 2008 S&P 500 after 20%, it dipped significantly. We can pull it up real quick. So this is SPY. You know what? Let's do another chart. Let's do S&P 500. We'll do max. We'll do SPX and we'll max. All right. So 20% off this high right here. If we were to calculate it, 1561. 1561 times 0.8, right? So 1248. What happened after 1248? So 1248 is right there. 1248, and then we see a huge landslide. So 20% seems to be a good indicator. But for me, I'd probably go with 15%. 15%, I'd be like, it'd be like a very challenging moment where you're like, should I dip buy or should I liquidate? But so far, looking across the indices, this is SPY at about 13% correction. We're bouncing up above the open of the year, so we're back in the green, which is a lot better to see. On top of that, I want to point out Dow Jones is back above the 200-day moving average, which is also good to see. It was at a 10% correction, right? Dow Jones, the NASDAQ real quick. This one hit a 15% correction almost. And now we're back at the 200-day moving average, which is about 10% correction. So from a dip buying mentality of the past, or like all the old school money managers, I think that it's still, like they still run on that. They still operate on that, at least the chart says so. And then one last one, IWM, small cap, about more than 15% correction, which was really scary. But this is where it's at right now. So if we can get to 10, move back up, that'd be great. But again, my view is we're gonna close flat on the year. Bitcoin's gonna probably close a little bit higher on the year. And if all this volatility continues, 2019 is gonna be a year of gold and Bitcoin, I feel. So that's where I'm kind of allocating some funds. Now there are ETNs, right? Very advanced instruments in gold, or gold miners, Nugget and UGT, be careful with that, right? That one keeps going down. It's purely a trading tool, but we'll talk all about that in a bit.
May I ask you, what instrument do you use to trade Bitcoin?
I buy directly off Coinbase. There's also GBTC in the stock market that you could buy. The issue with that is that they'll charge you a fee in between. Anything that you have, look, so if you notice about anything in this world, if someone provides you a convenience, there's a fee for it, right? It's your expense margin and their profit margin. Like you go into a restaurant unprepared, well, you're gonna buy food, or you go into Disneyland, you're kind of unprepared, or they kind of set you in an environment and you gotta pay that additional fee. So similar to this, if you buy GBTC for Bitcoin exposure in the stock market, there's gonna be fees in between. So that's one reason why a lot of people don't like it, when you could buy it easily directly through Coinbase by opening an account. Now, that's not a recommendation, okay? It's just educational opinion. I don't know what you're gonna do with your money, but don't go back and, and blame me. So that's where I buy directly, and then I kind of allocate them out into different exchanges, so that, because it's still the Wild West, but I see development happening in it, right? If you're seeing top tier VCs like Andreessen Horowitz here in, Sand Hill Road or wherever, Palo Alto, they invested about 100 million into it. So it seems pretty, they're investing into the infrastructure, right? Similar to investing into Coinbase would be investing into gold miners, right? So why am I looking at gold miners or gold stocks? Because I anticipate gold to rally. Gold, why do I think gold will rally? Because of the current global macro setup. People are devaluing currencies around the world. Well, probably you'll get a better understanding of that answer as we move towards the end of the discussion today, after we talk about China and how fraudulent China's been. How did I find that information? Basically, it's been disclosed by this Chinese billionaire, which we're going to listen to as well. So anyways, going back to this, following the schedule, FANG. So Facebook, 30% off highs. You guys know the chart? So 30%, would you buy Facebook? Facebook's a good company. It's a good company because we're probably all on it in this room, right? Does anyone in here don't have Facebook?
I don't.
You don't have Facebook? Oh shoot, okay, wow. Prove me wrong. But the numbers, right? Numbers wise, are you on Instagram? No. Not even? How do you still go to like, well, so if you see, there's something called, okay, I want to show you this real quick. So the past week I posted something about Amazon. Did you guys see it? This right here. So I went on Amazon recently, right? And we talk a lot about different business models in here, from platform to linear business model to software business model. Amazon's a platform, same as Uber, right? Uber just develops the middle platform, or they develop the platform for the consumer and the producer. The person who wants to give people a ride and the person who needs a ride. Amazon's the same thing. They develop a platform for people who want to sell and people who want to buy things. So they get fees from a seller. They're double dipping from a seller and a buyer, right? So just recently, so Amazon's like let's say top 10 in the world, right? If you're a top 10 company in the world, you have huge economic influence on the day-to-day life of people. I'm pretty sure everyone in here shopped on Amazon, right? If it's not Facebook, at least everyone in here has been on Amazon. If not, then you're probably still going to like a convenience store and stuff like that, or like Walmart. Would you say? I mean, is that a fair statement? Might be too.
Question.
Yeah.
Why don't you have Facebook account? Did you have it before and you closed it?
No, I just never had it. Interesting.
I know people who closed their Facebook account.
So I could relate to that. Growing up as a millennial, there was a period of my life where I decided, like, hey, I don't want to do this whole social media things. I came back. But I came back from a business perspective. I realize now that if I need
Public figure.
everyone's on it. That's where you have to sell.
Oh, I thought you asked if you own Facebook. I use Facebook. Sorry. If that's
Oh, I meant use Facebook.
Oh,
You
yeah.
consume their services.
Right.
Right? So that's where you probably get your information. It really advances the standard of living of an individual, right? But shifting away from Facebook, going back to Amazon, recently I saw videos on Amazon. Now, if you understand top 10 companies in the world and how influential they are, we talked about Apple in the past, right? A gentleman in New York City became a millionaire off of fixing iPhone screens. Those are very opportunistic opportunities. Becoming a millionaire fixing iPhone screens. Because Apple is such a huge company, they have like they move such huge economics that you gotta go side by side to them. Does anyone know like these new form of influencers like Gary Vaynerchuk on social media? A lot of millennials do. Okay, I won't talk about that. But basically, what I noticed that gentleman did is he became substantially wealthy through piggybacking off these platforms. That's essentially what the guy in New York City did. Apple was going to be a big hit. What he did was he piggybacked off of that momentum or that bleeding economics and just started fixing their phones. Right? You're shifting 1 billion units around the world, let's say, or whatever. I don't know the units. But there's so much like recycling into it. You know, there's business models being created out of that. So going back to Facebook, if Facebook's top 10 in the world, what are some of the bleeding economics we could think of? Well, shoot, some of the richest people became rich off of like having a Facebook page with like 50,000 plus followers or likes. You might be like, how does that work? It's all about its communication.
Oh, how did they get money?
So
sponsors.
when I was in high school, this is the immature days, I used to watch funny stuff on YouTube, Facebook, whatever, and it used to be this gentleman who would go around and do stupid stuff. And there are plenty stupid YouTube channels that goes around and do pranks and stuff or funny things, right? Looking back recently, I looked on their page, they're wealthy now. I could tell they're wealthy. Because it's like, dude, you own a page that, I don't know, 200,000 people liked. That's communication right there. What can you sell to a pool of 200,000? I don't know if you noticed, but I've been running these meetups for a while, and eventually sponsors came to me, so in one form or whatever. The mixers I ran, people want to talk to me now. My sponsor now is a company called Rooferall, and they're a real estate investment group. They want to advertise on my platform, which is this meetup. I just want to keep running these meetups because this is what I geek out to, and I become a better investor and all that, right? But they notice that it's building up a crowd, and they want to sell to a crowd. Everyone has some sort of a consumption pattern. You just kind of have to understand people and what they want to consume. So there are ways to do that with the internet. Now, we went kind of broad, but the key concept to understand is that the next big hit, like a Salesforce, if Salesforce becomes a big hit, which I believe it will, right? The tallest building in San Francisco. Well, you see all these developers developing on top of Salesforce, right? You got to piggyback off the big guys. When I'm in this real estate agent office, you don't see me going like guns blazing, single, solo real estate lone wolf agent, right? I'm piggybacking off of a team, a top producer in this office who brings in like a certain amount of transactions so that I could get that bleeding economic effect. So that's the concept of it. So shifting that all the way back to Amazon, we went kind of far. Amazon, can we accept that? It's a crazy platform, right? And if you're not, if you look at digital businesses, right? We look at small to medium-sized businesses at bizbuysell.com. But if you look at digital businesses, some of the biggest digital businesses are FBAs, Amazon FBAs, called Fulfilled by Amazon. That's not surprising to me, right? Because I know they're publicly traded and they're a big giant company. They have this bleeding, opportunity, economic opportunity. So going back to the Amazon, what I'm showing this picture right here, they're introducing videos. So what I want you to pay attention to moving forward is that whatever platform you engage on that's winning, like an Amazon platform, an Uber platform, whatever simple feature they introduce next, it's a software feature, hugely like influential. What do you think could happen to this lady talking about skiing tools or whatever? She's gonna get a following, and she's gonna get more deals. It's a communication school.
Right.
It's crazy marketing. So Amazon's evolving into what I call social e-commerce, not just e-commerce anymore. They're like, you guys haven't seen new retail, right? There's Jack Ma of Alibaba. There's old retail, a non-connected mom and pop shop. They're introducing services to connect mom and pop shops in China right now. Connected cafes. It's basically the IoT play, the Internet of Things, right? So yeah, you had a comment?
Funny question.
Yeah.
So what happened in October? That's a big question. I mean, why does a company as strong as Salesforce go from 160 to 130? The fundamentals of Salesforce didn't change in 30 days.
Yep.
They lost 20%. Same thing with Amazon or others lost
So-
$1 trillion of value.
Yeah.
But 1 month out of their eternity wiped out in 20 days of trading wiped out, right?
So I do enterprise. Yeah, I do enterprise software sales, and the easiest way to explain to you, first of all, Salesforce is kicking butts. They got the highest billing in SF for a reason, right? But going back to the whole software sales. I see these deals going down, right, in real time. And I'm in the meeting rooms and we're talking about those deals. They just evolved into a platform that everyone wants to develop on. We don't need to justify money exists or not. You know what I mean? So a great example would be, let's see, something that's not profitable but we're still buying, like a Tesla. Would Tesla work? We give so much premium to the CEO that promises us so many things, but execution-wise doesn't deliver.
No, the point I'm trying to ask is, if the whole market went down in October, there's a certain snowball, everything
Yeah,
went down.
yeah,
But an incredibly strong company like Salesforce also went down 20%, but the fundamentals of their company hasn't really changed
yeah,
in 30 days.
yeah.
Isn't that ripe for a rebound 6 months to a year from now?
I think so too, and I actually bought some more calls on Salesforce as it was going down.
What are
So.
people to think?
I basically think that, like I said before, for every meeting I come to, S&P 500 is basically
Yep.
a big train, right?
Yep.
Even if you're not in the S&P 500, every single company is going to do whatever the S&P 500 does, just a different degree. So if you take S&P 500 train went off tracks, 10% drop, everything is going to go down. I don't care what it is. You can give me the symbol, pull it up, or put it on anything, it's going to go down. So if S&P recovers, yeah, you're right, CRM, they're all going to recover. The big companies are going to recover very well. But the S&P keeps going down, even CRM and all of them are going to drop another.
I think you're right. I think you're
So
totally
the
right.
S&P is the one that guides everything.
So I think JC is
So
like,
consider membership, what member it is.
Even
And
if
whatever
it's not-
happens to the group it belongs to, it will happen to it too, no matter what it does personally.
yeah, so no matter how great a company is, right, if, right now it's global macro. If you hear a lot of money managers, they say global macro's back. So if
Right.
global macro's back, the game to play is like indices, gold, currencies, right, because the individual stocks won't really perform right now. I admit, I love Salesforce, man. I personally, I have my own personal subscription to Salesforce.
Right, right.
Right? I love the business,
Yeah, they're gonna-
but the global macro is overriding of what's going on. No matter what I think. Remember we drew that pyramid earlier today, right? I showed you, I don't even know if I have it still, I don't have it, but at the top of what I put, sovereign. Above enterprise is sovereign. Right now sovereigns are distressed, essentially. So indices are distressed as well. And what is indices, or what is an index? All the enterprises, not one enterprise, all the enterprises. So if all the enterprises are selling off, well shoot, so will Salesforce. So it's truly a global macro environment right now.
That's why I put in there Amazon with the S&P in the last bear market, so you can see they both went down 60%. So it doesn't matter what company.
Yeah. So don't be fearful, be mindful of the opportunity at hand.
No, I'm just more
Right.
concerned with Amazon and Apple, two of the big successful companies in the world, saying that the holiday season won't be as rosy as it would be. Does that take out the whole food chain of the Targets and the Walmarts and all the others that are saying, well, if they're saying it's gonna be bad, we might as well hedge our bets and say, we got great numbers for our quarter, but we're gonna also say that December's gonna be possibly not as good as you expected, and the whole retail Christmassy market goes along with it.
Yeah. So look.
There are kind of two items. First one, this year all companies get huge kick from the taxes. So they will report earnings higher than expected. Next year there is going to be no kick from the taxes because of the new tax law. So they need to prepare Wall Street analysts to the thing that next year they will report lower earnings.
Makes sense, makes
And
sense.
so they started gradually, and I had a question.
Yeah.
So a lot of people talk about what's going to happen next. Actually, we have two corrections or whatever.
This year, yeah.
Sales started, and I didn't see a lot of analysis. How did it start? What happened? What was the triggering event? How did it continue?
Wait, you're asking what?
Analysis. Well, let's say, like sell-off started a couple of weeks ago. How did it start? What triggered it?
You're talking about-
How
what
did it
happened,
go?
what caused it?
Not exactly what caused it, but how did it go? The dynamics of the process of this sell-off. That would be
You're
very
talking about-
interesting to read about it.
Yeah. Well, I think the good thing
We
about
explained
is
it, though.
There's just not gonna be one reason, there's
Yeah.
probably about 10 reasons, but they're all gonna contribute 10%, 5%, 20%. Like the tariffs is a big one. As soon as Trump starts talking about putting tariffs in China, that right there, the 20% contributed to the market kind of taking a bend lower. And then when China responded, it went lower, and so that's part of it. And there's other stuff too.
That's kind of, talking heads kind of versions, and that's what they say. But actually, of course, there was kind of different forces, they fought with each other, and it would be really interesting to see analysis. So these were these forces, and then
You can't have that analysis.
Well, there were a couple of big earnings misses too.
So-
There were a couple
so we-
Sparks and a couple of them.
yes.
A couple of big companies announced worse than expected results, which created a spark that dropped down a couple of them. If they do, that takes out the whole market too. A couple of those took
And
place.
the US dollar skyrocketed, emerging markets started crashing.
So Naveed commented we're reaching the end of the current debt/economic cycle, right? So things to kind of look at is, there's many things to look at, right? Is everyone over leveraged? Are corporations themselves over leveraged? Are individuals over leveraged? Right? A lot of money managers like India right now, because it's like a younger demographics, that's not leveraged. So what does that mean? They could leverage a loan to buy a home, a car, credit cards, insurance. We could sell them like crazy. There's a lot of consumption to be happening right there. They're young. They're growing. They're ambitious. Huh? They want it. Yeah. So India is a good play in terms of like economic shift. It seems that way with China. I want to kind of save on time. I think with the billionaire interview that we saw, or that I saw, it seems like there's a revolution in China right now. The bear market in China, he believes is going to cause a social revolution, but we can't get there yet. We got to get through gold and Bitcoin. So Facebook kind of pointing down right now. I'm just going to show you the fangs real quick. Apple starting to point down. So kind of like earnings, you could kind of say this is like almost a head and shoulders, right? But uneven shoulder right here, let's say. That's Apple. I already did Facebook, Amazon. Amazon's pointing down as well. So the big players are pointing down, right? Right. You got like a little downward broadening wedge right here. That's Amazon. We'll go over to what's next? Apple, Amazon, Netflix, NFLX. Netflix is pointing down, right? They had explosive earnings. I listened to earnings. It was actually a visual earnings. It wasn't an audio earnings. They gapped up and then just went down. So that's not looking good. Now that 200-day moving average is going to act as resistance for Netflix. And then the last one is Google, which is probably the most important one. One of the most important one. Also Microsoft. Look at this. Google's breaking down the 200-day moving average. So it is truly scary right now, I'd say. Because Google is such a consumer infrastructure software play. Internet too. Like like those categories have deserved premium, I feel. But it's kind of pointing down. And then my favorite one, Microsoft's my most favorite one. If you just take a simple look at Microsoft, right? My purple line is the 200-day moving average. When was the last time it touched the 200-day moving average? The purple line, the pink line, back in like 2016. 2016 is right here. So 2016 was the last time it touched that. We're touching it again.
So your favorite one, Microsoft, obviously.
Man, I love Microsoft.
Oh, absolutely.
Dude, I would just buy calls all day. I actually bought some more calls. Now, that might be unwise if we are in a truly, if things go bust. But, hey, we'll see. I want to speculate a little. And that's why the last stock that I'm going to show you today, one of my most bullish ones for a reason, it's a distressed software play. It's BlackBerry. I'll tell you why it's not.
Really?
Yeah. Now,
Wow.
see, you're like, what the hell, why?
Wow. I'm intrigued.
Extremely great leadership, billionaire backing, all right, shifting away, it was 80-20, 80% hardware, 20% software. Now 80% software, 20% hardware,
Wow.
and now focusing on enterprise cybersecurity. So that's a little taste, okay?
Sure.
It's oh my god, dude, I think I gotta just start accumulating like crazy amounts of shares on this one. But that might be a little too ambitious, so I'm doing like leaps and stuff as well. But going back to the Amazon platform, right? What does Amazon's so popular? Bleeding economics. If you know how to capture that bleeding economics, you can become wealthy, like this lady right here. She's smart because there's no competitors in there. You go in there, the first people see it, like, oh, she's the thought leader on skiing stuff. Easy. So just something to be mindful of platforms and how big of a role they play. Some of the notes, going back to Apple, right? We kind of looked at all this, Amazon down minus 20-25%, right? These are double digit in their teens, right? Google 16%, Netflix 26%, Microsoft 7%. Would you buy Google or Netflix at 26%? Well, that one's kind of hard, but Facebook at 30%. 30%. It's really hard for me to see Facebook going down to 40%. If it's 40%, I might just buy more calls. I might kill myself. Okay, not literally, but like, you know, in a trade, but it just looks too attractive for me not to ignore, and so I'm having some risk capital allocated there. But going back to Apple, 9% right now, might go down to 15 with the recent earnings momentum gap down, and also them hiding their unit sales, right? Talked about withholding iPhone unit sales. This is a major KPI. Why the need to hide these numbers from investors? Phone prices globally, so we were talking about this, in a decline as technology is advancing, yet Apple is still able to sustain high-priced premium phones. Question is, how long can they control premium prices as phone/hardware is going to get cheaper and cheaper? That's the question right there, right? I mean, maybe when we start seeing like, oh my God, they're getting 80% margins. That's messed up. That means we're just paying like $1,000 subscription if you buy a new iPhone every year. That's expensive. I think their solid balance sheet, however, with their solid balance sheet, they will be on an acquisition spree to sustain growth and impress investors. It gets significantly harder to perform, okay? This is my technical discussion number 94. 94 sessions, 2 hours with you guys. It gets significantly harder for me to like come up with new ideas, but that hardship makes me a lot better, I feel. So I got to keep pushing it, though I can't push forever. I'll tell you guys that. So I think they're going to go on an acquisition spree to sustain growth and hopefully Yelp, right? So I feel that anything that, because Wall Street is stressing them to perform, or not Wall Street, but investors, big investors are going to stress them to perform, right? And they got budget to find companies. Well, hey, it's great tailwind for an entrepreneur who's selling something that they would want to buy. They're going to be shopping in like this next business cycle. So be aware of the acquisition, right? And that's why I said in this meetup, like, hey, we get a lot of technical people come in here, right? We get people like executives from NetApp or, you know, stuff like that, whatever, I forget. If we get them in here, we got some, you know, some high capital, human capital individuals. We should start an incubator. And in the deals that come my way, I'll facilitate it to you guys, right? You guys buy the equity first before the venture capitalists. But that's through our own critical analysis of that amazing technology. So that's the next business cycle. So in the next recession down, we're not going to do it now, right? Now it's just the premiums are going to get wiped out. In the next recession down, we do have it. I'll think about organizing something, and I'll go source the deals, and we'll facilitate the equity buying, make it fair. That'd be pretty cool. So that's something I feel pretty excited about because I geek out the technology. But that's a 5-year talk, okay? That's not yet. But yeah, I think Apple's going to go on an acquisition spree. I just wish I had some deals for them, right? To really truly get rich is someone has to buy you out, right? Vista Equity Partners, that billionaire gentleman that I really respect, he became a billionaire because, well, hey, he bought software companies that went from 400 million to like a couple billion, right? He sold Marketo to Adobe. So I'm not interested in selling individuals that much anymore, but I have to still, like as a real estate agent, right? But I'm actually more interested to sell to corporations now because they just got the money and they don't complain about, oh, save me $1,000. They're like, you know, okay, we'll put in that extra premium of like 50,000. So it's a lucrative space to be a venture capitalist. It's what I'm slowly puzzling in and sharing with you guys. So if hardware prices keep declining in favor of consumers, then I think things will move more aggressively towards powerful software. Again, Chris, I think your argument was the whole 3D hardware, right? Or 3-dimensional hardware, or more vertical.
No, I'm just saying that the chips aren't going, you know, smaller and smaller transistors.
Yeah.
They have to go different ways.
Yeah, so I'm not an expert in semiconductors, but yeah, maybe we can talk more on that. ICinsights.com. Have you heard of that? They're a leader in semiconductor research. Something I recommend to Raj. We have a comment right here. OnePlus is launching with T-Mobile at much cheaper price. Cool. That's a plus. Cheaper price for them, so more margins on there and more profits. Netflix 26%, Google 16%, and Microsoft 7%. So that's enough of the fangs. Let's move on to the next part. Let's talk about cryptocurrencies. If you guys aren't too much interested in this, then we could talk about something else. But why am I bringing it up again? The chatter among money managers and cryptocurrencies are increasing, right? Here's one comment from Mark Yusko. He said, just remember that 40% of adults on planet Earth have no bank accounts, but 2/3 of those do have a mobile phone. crazy, right? You don't have to go to a bank. You just need a phone. And
Can you explain the Bitcoin versus Bitcoin Cash? Why Bitcoin
Uh,
Cash went up 20%, but Bitcoin didn't really move?
so I think Bitcoin is like, so I'm not an expert at this. I'll disclose that.
Does anyone know?
Can I make a comment on Bitcoin?
Yeah, go for
So
it.
basically, my biggest concern with Bitcoin is from the get-go, it was a great idea because they said we're gonna have 21 million, and that was gonna be the end of it, right? So traditionally, it was like, wow, you're gonna have a limited supply, so you're gonna have a real value of money, right, holding value.
Yeah.
But then what happened was, because the US dollars they keep printing, but what happened with Bitcoin was, after they got to like 10 million, they got into a discussion saying, we don't like to go this route, we wanna go this other route. So this is called a Bitcoin fork,
Yeah.
right, fork. So that's what Bitcoin Cash came in, it was a disagreement with Bitcoin, they made their own because they wanted it faster or whatever, so they split them up.
Yeah.
So you got Bitcoin Cash getting another X million shares, and then you kept the other one at 21 million. So now we really don't have 21 million Bitcoin because you keep forking, so you really.
You're talking about Bitcoin Cash.
Yeah, well, I'm talking about Bitcoin.
Right,
Bitcoin
right.
was a fork.
Right,
for
right,
Bitcoin Cash,
right.
So basically, it's not really 21 million anymore, because every time it forks, you get 10 million going sideways to a brand new coin. So you're not really have a 21 million in reality of a limit.
Yeah.
Along the way, you're getting higher and higher with a different coin name.
I see.
So that's why.
So I'm not a super expert, and therefore I wouldn't allocate more than like 5% of like your net worth, let's say, or maybe even 2%, depending on your risk tolerance. But for me, it's it really goes. The reasoning for Bitcoin, it really goes back to the global macro. Well, first of all, the chart of Bitcoin right now is a phenomenal risk reward, right? It's hovering right at 6,000, 6,200, 300, whatever you want to call it. If it breaks that, then get out. But there's a ton of upside. So, if it's an instrument that could help me get money from other people, because that's essentially what we're doing. We're still, and we're not really, we're basically taking money from each other. I mean, if you think about it long enough, like we just simulate a market right now. We all throw money into a pool, and then like one person starts pulling it out, and they're like, oh, they're taking it out. It's just an instrument to play, right? And so now, from a global macro perspective, the economic setup of global macro, it's telling me very bullish for gold and Bitcoin. So that's why I'm looking at Bitcoin. And Bitcoin, it just looks like it's well recognized among everyone, let's say, right? Your grandma probably knows it, is what I'm saying, right? That's to me, that's power. Now, that's power because if anyone owns a business and understands marketing, right? Like if you look at Facebook, like 30% of their expense or whatever is on marketing, right? Like hundreds of millions of dollars on marketing. It's not easy getting people's attention. That's what I'm saying.
So you're not making a distinction between Bitcoin and Bitcoin Cash, even though Bitcoin's up about 1% and
I'm not.
Cash is
Yeah,
up 22%
I wasn't
today.
right. I wasn't talking about that. I was talking about the global awareness and the ease of that. Because if you know something, let's say the most untechnical person, they just hear like, oh, everyone's talking about Bitcoin. It's recognized. I need to get access to it. How easy is the access? You just need a phone, right? Like this game is behaving on a behavior where it's like, I just need to get it because everyone else is getting it. And I will figure out what to do, whatever. I don't understand anything, but I'm going to get it along with everyone else. That's literally what's happening right now, right? But it takes substantial discipline to tell yourself like, okay, analyze the audience, what are they doing? So I want to feed on that behavior, essentially. That's essentially a capitalist, like everyone in here wants to make money. Well, someone has to lose money for you to make money, essentially. That's and every year as the population increases, the government has to keep printing money to, have that distribution fair. And when we transition over to China, you're going to see that China's been in a fraudulent printing spree. So good news for you guys, real quick. I just had a message from my team. So the open house I was going to do today is actually canceled. The sellers decided not to sell, so they decided to back out. So I got more time for you guys. Now I could go slower, and we could probably go over 2 hours, which it seems like it. That's the only way I have access to this office. If not, we would only have 12. We would only have 12 seats. I know.
You have time for that?
Well, I mean, so realtors, right? Like, if you think about it, consumers or average Joe, they work on weekdays, and on weekends they need to consume some type of activity, like house hunting. So it sets up pretty well to sell on the weekends and also on the weekdays. Well, if you want, right? So That's, now, Maureen, I haven't seen you for like, I guess,
Over a year.
over a year. But hey, glad to know we're both doing well still, right? I want to show you this. I showed them last week. To me, I find this truly fascinating, but maybe we could look at another area today.
It'd be funny to look at the Crystal City, Virginia, where
Yeah.
the speculation of Amazon buying it for
Oh,
suddenly
well,
this
okay.
weekend,
I don't think
every
it's-
house just suddenly
Yeah.
went 10%.
Yeah, so,
I wouldn't be surprised.
yeah, true. But I don't think I have that live data.
No, I understand.
It's
but
lag data,
probably
right?
would be a
So,
safe bet.
on top of what I always show you guys, this area, because I'm gonna show Marine, we're gonna look at another area and see if this is true, okay? So this is LA, but real quick, we're gonna focus, is this LA? Oops.
It's Malibu.
Okay, we're gonna focus on the Bay Area. So, this is a software I pay $850 a year, basically to get people's contact information. It's very detailed, right? So this is very basic stuff. You already see that 2 million is red, 1 to 2 million is yellow, and then green is 750 to 1 million, right? So most of the high-end homes are over here, right? Like Palo Alto, whatever. And then over here is like Santa Clara, Campbell. And then over here is like San Jose, East San Jose, right? But that's typical. You could look that up on Zillow, right? What you probably can't look up is the equity map. How much equity's been built up. So the majority is blue, meaning that everyone's a millionaire on paper, I like to say, because everyone is about more than 80% equity. So how do I know that? Well, we could zoom into anyone's property, and I keep showing this. That's why I gotta go and re-edit these videos if I ever decide to upload them online or whatever, because of names and confidentiality. But we can see that they purchased in 2008 for 1 million, and they built up to 1.7. Now they have about 1.5 in equity. So very high detail information. And the only thing I really need with this software is just a name.
What do you do with that?
So let's say I understand the economics, right? Let's say you're an older age profile, and you have 80% equity, and I think the talk track is maybe you might want to retire. So I reach out, friendly reach out. It's a cold outbound call, and ask for business, because that's essentially what we do in the enterprise software sales. You ask each other for business. Hey, Amazon, I call over to Amazon. Would you like to do a deal with us? And if I keep getting business, at the end of the day, my balance sheet looks really good, my income statement looks really good, and investors want to invest with me. That's the cycle of life, at least business life. So those are things that I kind of look at. I want to leverage data, because I know that a lot of agents in here don't, they're not too tech savvy. They're not tech savvy. I'm super tech savvy. I'll disclose that. I love technology, and I would use it to my advantage, is how I feel. So this is one way how we use it. So for the fun part, now we know that there's a lot of equity built up right here, right? Most of them are blue. Let's look around the nation, because we haven't done that yet. Now this is a little digress since I got more time today, but is there a place you want me to look at besides Virginia?
Roseville.
Roseville, where is that?
North of Sacramento.
Okay, so let's do that. So let's just do that. Sacramento.
That's where everybody in the Bay Area is moving to.
So 20 to 50% equity, so pretty fresh, right? Because you probably just recently purchased, and then we could go in there and look around. Actually, we could do probably another layer, the turnover layer. When was the last time people sold? 15 years plus is holding. So majority is this color. So they've been holding for more than 15 years. This is also in line with the Bay Area as well. Texas, Austin, Texas. Yes, we'll do Texas as well. So did you guys want to see any other layer? Since I have access to this type of stuff. For sale might be an interesting data point, but it might not.
Can you do a value change over the last year?
I don't have that level of sophisticated data. I wish I would geek out to that too. I'm definitely a data person.
In the last sense of all the equity markets going up, people are just spending more for a house than they probably should be.
Yeah. So looking at this for a while now, I probably would want to buy a green one than like a blue one, because I'm just giving you your liquidity that you're looking for. You got 80% plus in equity. But that's another story, right? Like you could say like typically when I'm in an open house now, the land is like 1.5 million and the home is like 300,000. That's how I feel about it. But let's look at Austin, Texas, and then we'll go back to trading stocks. But let's see, Austin, Texas, which that would be over here. Okay. He did say Austin, right, guys?
Okay.
Okay.
Have you noticed some of the agents get a little more, they kind of realize that they're getting to the top in the real estate market, they get a little nervous, and people telling them, hey, I'm going to go ahead and back down, or
Yeah, yeah. So yesterday I was in an open house, Cupertino, 1.98 million, and I thought the markets was slowing down because I've done like a 1.8 million dollar open house, and what I noticed. So I don't have the data point for this, Raj. I don't know why. I think my access is only California, so I apologize. But anyways, I was doing a 1.98 million dollar home, and usually at that price range, like 1.2, 1.3, you get like 40 parties. Okay, like people are looking for 1.2, 1.3 homes. So I feel like the market still wants to buy that. But in a 1.8, I did a 1.8. Nobody really wants to buy that, or at least this particular home. In Cupertino yesterday, 1.98, we had 32 groups. Really good. So I met a lot of people yesterday.
So you press at 1.98, so it appears under 2 million?
That's just how people do it. I mean, the team, it wasn't me, it was the team who priced it that way.
Like marked down for 2 million, right?
Yeah. Yeah, so now I thought about the economics and why to pursue the realtor license. So when I had the financial advisor license at Morgan Stanley, I didn't, yes, it's true, this area has deep balance sheet individuals, a lot of individuals with deep balance sheet, as you can see, 80% equity. That means I could pretty much go to every door and say, hey, can you angel fund me for my business and pull a HELOC out of your home or something? Right, home equity line of credit. Right, everyone's a millionaire, so there's a lot of deep pockets. But from a financial advisor perspective, yes, it's lucrative for them. I just didn't like the wealth management part. I don't think I'm a wealth manager where I'm like talking about, you know, how's your family? Let's do this for your college planning, your retirement planning, tax planning. That's not my level of conversation. I like the more enterprise level, like, hey, how can we buy out this business or commercial real estate stuff? Now that's one thing. The other major thing was conflict of interest, which I talked about to you guys many times. If you're in a brokerage house like Goldman Sachs or Morgan Stanley, you can't really operate like the way I do. I can't talk like this. If I were to talk like this, I would lose my license. I would probably get fined and maybe go to jail. I don't know. So it's a lot more freedom and flexibility to be just a passionate investor rather than a imprisoned money manager. Is how I like to define it. But they, you know, now that I'm more tech savvy, right? I love like enterprise software, database, and all that. When I was at Morgan Stanley, they're so large in their operations that they're using legacy technology. So if I had kids today and I would tell them to go work for a company, I'd probably tell them to go for a startup that's using Slack, Salesforce, Google, whatever. Don't go to a legacy company because you're going to do yourself a disfavor. And I'll tell you exactly why. This week, I geek out to technology. I went to Fry's. The one on Fremont Boulevard, anyone know? Or Mission Boulevard in Fremont? I went to Fry's and I'm a millennial, I'm 27. And I walk in there and I like to think like, wow, like this thing is huge. It's like probably 2 football fields like wide, right? And I was like, where's the bathroom? You know, to one of the people working there, and it was all the way in the corner at one end, right? Imagine me as a little person, that corner, and I went over there, went to the bathroom, I came out and I looked across and I'm like, wow, this is such a legacy business. The person owning this is probably a much older profile who's just letting this asset decay. Something could be done to this. But I also told myself, or said to myself, like, wow, this used to be a great place and a great time. People don't go out anymore like they used to. And I kind of missed that because growing up in the 90s, people were going out. At least as a kid growing up, that's what I visually saw. But now as I'm becoming an adult, it's like these Best Buy, well, Best Buy's still pretty good. But Fry's is just, man. So I walked from one corner to the other corner, which is like the computer monitors, because I was thinking of like, you know, getting more monitors or whatever, just checking out, geeking out to it. And you see a computer salesman, like a PC salesman, man. And I'm thinking like, damn, like those sales are not good. Like, but this is why I highly recommend if you have kids, shift them towards a startup that's using Slack versus like Fry's computer PC salesman.
You're right.
You're not doing yourself a favor because I don't know. It's just, yeah, it's a huge disconnect. But that's why I noticed at Fry's. So I still like Fry's, but I probably would go less and less now after that. But anyways, going back to the crypto market. Any comments before we go back to it? Okay, so Bitcoin presenting a great risk reward. So this is let's see, you'll even find okay, so Tony Caldero is also talking about Bitcoin, right? I mentioned to you guys that, you know, in my normal connecting with these money managers online, following what they say and all that, money manager chatter coming up, going up on that. Even the wave theorists, right? Tony Caldero is talking about Bitcoin. If you go down over here, Bitcoin. We have been following this very volatile cryptocurrency since its bear market began in late 2017. Now, keep in mind, I don't follow like people who I don't think are credible or have some technical background in trading. I follow the guys who do, and if the guys are talking about it, then they've been years and years in the game. I want to follow them. So I am a follower, right? Not just like leading a group or whatever. So that's where I kind of derive my information. So if the wave theorists, the objective wave theorists is talking about Bitcoin, I want to look at that as well. So there is some, you know, quite a bit of action right now as we speak. Anyways, Mark Yusko, right? 40% of adults on planet Earth have no bank accounts, but 2/3 of those do have a mobile phone. Keep in mind you got to understand not just marketing awareness. When you run a business, you got to do marketing, but also the friction between you getting maybe to the money or to the target consumer, right? If there's too much friction to access Bitcoin, how can it go up? But I think with technology being produced like this, it's significantly reducing that friction. So my cryptocurrency investment thesis, all right? All the pros and then one major con, as you can see right here. The major con is that the government can declare it as illegal to hold cryptos. Declare it treason, put you in prison for holding that. So be very aware of their power to control that, right? Because it's all about military power. Not so much about, well, when you get to a sovereign level, it looks like it's about currencies and who's operating on the currency platforms, if that makes sense, right? Just like how we all decide to operate on Amazon, we also all decide to operate on the US dollar. And so sovereigns are constantly tug-of-warring, competing for, operate on our RMB, Chinese RMB, or Japanese yuan, or yen, right? All that. Is it yuan or yen? I forget. But yeah, so that's the major risk. But the investment thesis, now, I know, JC, you challenged that. There might be more supply in Bitcoin. So, right, I should do more homework on it, I feel. 21 billion in Bitcoin, max supply. Million, not billion. Max supply versus 7.6 billion people in the world. Right? That not everyone can hold a Bitcoin. It's becoming a fraction of a Bitcoin now. More mobile phones in the hands of people than bank accounts, which is that comment that you saw earlier. VCs are participating in funding blockchain projects, right? So I'm seeing that with Andreessen Horowitz. I think this morning, or just in the past week, they announced another Series E funding into Coinbase. Let me just confirm that real quick. Series E, is it? You saw it?
So, yeah, you're right.
Okay, Coinbase. So similar to how I'm bullish on gold, right? Series E funding, is it the most recent? 9 hours ago, Coinbase roundup, Series E funding, institutional
So it was
interest.
worth like 8 or 9 billion or something.
Yeah, it was SoftBank. Okay, SoftBank. We did a meetup purely on analyzing Masayoshi Son's business and his vision fund or whatever, his venture capital fund, the largest in the world, 100, well, more now, 100 billion, right? So, hey, if he's gonna finance the miners, the Bitcoin miners, right? Maybe we could look at gold miners in a bit. Yep.
I am a little uneducated, so what is their kind of relationship between Bitcoin and Coinbase?
Coinbase is a middleman that gets you to the Bitcoin, the exchange. How do you buy stocks? You need a broker.
Right.
Coinbase is the broker.
They make money on the spread.
They make money on transactions. Yeah, like
All of the cryptos.
I see.
yeah, when I put money into Bitcoin, right? To buy one Bitcoin, transaction is about $80
Okay.
at 6,000.
Well, but that's kind of sign that if everyone rush for the exit, they will use Coinbase to get out.
Yeah.
If
No.
everyone rush in, they
No.
will use Coinbase to get in. But it tells you nothing about Bitcoin.
Coinbase lets you go to cash. You could go to cash.
Exactly.
Yeah, so it's still on Coinbase.
And do you remember that Bitcoin started to fall? There was no really good instrument to short Bitcoin. It was extremely difficult.
Yeah, and then
once instrument appeared, the futures and everything, Bitcoin almost the same week, it started to go down.
yeah.
Convenience of shorting.
Yeah. So 2018 was definitely the pop of the bubble for Bitcoin. Yeah, you had a comment?
Just a basic question, so like, how Bitcoin like going up and down? So because there is no stock market, right, for Bitcoin?
How is it going up and down?
Yeah.
It's just basically one's agreement to purchase something, right? I guess the best way is to show you a Monopoly game that I showed people in technical discussion number 20 something.
Yeah, but there is actually market. You buy it somewhere, you pay certain price. There is market.
There's,
You can get Coinbase on your iPhone, and you can see what the current price is and actually buy.
That is not on a stock market, right?
it's not a.
No,
It's not a stock market, but it'll tell you the current price, and it's not clear what the spread is.
There is a coin.
so the more technical engineers are building out that exchange infrastructure for us to trade on it, right?
ETF, GBTs,
Yeah.
Yeah, but in general, I think your question was about what is price discovery process for Bitcoin. If there is no price discovery
Coinbase.
process like for
Yeah,
stock.
you go on Coinbase or another,
Yeah.
and they all have their prices.
So on top of, so you guys know that the real deal, okay, like you want the best deals, you probably don't want to go through a real estate agent to buy a home. You want to cold call and find the deal yourself. That's removing the middleman. You know what I mean? It applies to everything. Like, well, I wouldn't say go and find out how to directly transact in Bitcoin. Well, yeah, you could buy it from a private person. That'd be a way. But it's the whole middleman concept. But let's move along. So we all know that there's continued VC funding. SoftBank, a very respectable gentleman, billionaire in Japan. He's actually Chinese or Korean, I forget. No, I'm sorry, he's Japanese, but he's in Korea. One of those. They're funding it, so that's more bullish indicator to me at this level. Accessible hedge against governments around the world, similar to gold. I'm bullish on gold, right? But I don't feel that millennials understand gold. Yeah, millennials don't understand gold. If you ask any one of my friends, what do you think of gold, like as an investment? They're thinking about how to afford a home at this point.
Right.
Right? So think about the crowd in Bitcoin versus gold. I feel that there's a bigger crowd in Bitcoin maybe. Yet the size of Bitcoin is like 200 billion. The size of gold is like 8 trillion, if I remember right. It's in the trillions. So there's substantial upside for Bitcoin. Even at 6,000, you might feel like, oh, wow. But this is a global game, I feel. Accessible hedge against governments around the world, right? Why do I say hedge? Because of unprecedented money printing around the world, right? Remember the milkshake theory? How I said that, I was watching Real Vision, the gentleman said that from Santiago Capital in San Francisco, he said that imagine like a milkshake and everyone has a syringe instead of a straw. And in this straw or syringe, they're injecting money into the milkshake. China, Japan, Europe, USA, but now USA flipped it and turned that into a straw and it's sucking out the milkshake. Right? They're not injecting anymore, but the rest of the world's still injecting. That's the current economics right now. So unprecedented money printing, and you see this in government, unprecedented government debt, and unprecedented Federal Reserve asset holdings of treasuries. This is the most they ever held. So absolutely incredible. I think this sets us up very well for Bitcoin and gold, but I probably wouldn't purchase gold directly. I would look at gold miners. I would look at the Coinbase of gold, right? Or the gold miners of Bitcoin, which is Coinbase. Evolution of the currency and major opportunity for wealth creation among millennials. Let's be honest, man. Like, what wealth creation do millennials have? We talked about this before, right? A lot of people got their wealth from real estate. I would say the majority in here, probably. I'm pretty confident from real estate. Just purchasing something that appreciated like 50% in less than 30 years from the last cycle. I think I saw this property purchased for 2013 for like $1 million. Now it's like 1.7 in 3 years.
Crazy.
Crazy, right?
It's great.
It's insane. It's great.
Great for the owner.
Yeah, great for the owner, but now you got to think about like the next generation. So maybe millennials might not consider purchasing. Well, I don't know. I'm not the ambassador or the representative for all the millennials. So it's already there. It's accessible. Majority of people like the ease of access, and it's beginning to becoming easier with more additional investment. Right? What do you think will happen to Coinbase's Series E funding from SoftBank? They're going to remove friction, and they're going to market more to people to buy Bitcoin. So what should you do if like they're funding people, they're getting funds to have more funds to market, to build out the infrastructure, make it more safe, easier access. So think about those things. This is the current market cap for cryptocurrencies right here. I think it might be a bottom at 200 billion. We'll see. It could break out to either side, up or down. But that's pretty much it for cryptocurrencies. Did you guys want to chat any more before we move on to gold and then finally to China, the most exciting part of this meetup? Okay, all right, let's go to gold. So Maureen, I remember the last time you came was when the first time we initiated a stock simulator. Very depressing now for a simulator. I actually grew the simulator to 2 million from 1 million.
Nice.
And now it's at 1.6. Just doing kind of bad now.
Doing what, ETFs?
If you want, yeah, so mostly stock options. Did some short selling as well, but
That's your virtual fund performance?
yeah, virtual fund performance, because exactly the last time I saw Maureen was she went to the meetup where people were like, let's do a simulator, it'll be fun. And then they're like, how much should we start with? And we started with 1 million. So I thought now seeing her again, it's a nice 1 year,
40%.
It was at 2,100,000, which was way more impressive. But market tanked. I didn't bother buying puts because I was watching my own portfolio. Come on, man, you gonna try and protect a simulator?
So you had a 40% gain in 2018?
Yeah.
That's great. For you.
No. Was it 18? It's like, when did we start? I forget.
Yeah, when did you
Yeah,
start?
I don't remember. It was
Exactly
last
1 year ago from today. I think it was like November,
That's spectacular.
October. Let's just say October.
Okay.
I think it was October when we met for the first time. It's not hard. I mean, I did it with a 9-to-5 and like teaching you
That's
guys.
amazing. That's fantastic.
Okay, well, the flattering, I gotta get it some water.
Was these buy and holds or were you trading?
It was buy and hold. Let's see. So if you could see some of the positions, so the most recent market dip, right? I sized up on Microsoft like crazy, on like Workday and Splunk. These are my most recent position. I think I tried to purchase 100 calls on Facebook at 150 strikes, right? With about 7 months out. So I just hold them for like 3 months and then sell it.
Or are these all long trades?
They were mostly all longs. I have some puts as well. I have a short portfolio as well down here. So this is my short portfolio. One of the awesome shorts that I had was this one right here, HM.
yeah.
So it says 2 shares, but they reverse split, right? And so I think I had like more shares than that, or maybe they reverse split by 1,000 or whatever.
It was something like that.
Yeah. So if that's the case, I shorted at 3,700, and I was at 2 cents. Of course, it wasn't at 3,000. It was at like $15, and I just shorted like 5 grand shares or something like that. So I understand the markets a lot more, right? Now, even me with my trading, if I make money, I still play a simulator, right? I started off with a simulator. The very first time I was introduced to the stock market, well, besides high school, after that was in college when I played the stock market challenge. And first time like I said, I got top 5. Second time I was dead last. And in the next 3 games, I was first. So I came back that summer with vengeance.
That's great.
Yeah, so I at this point, I'm a big fan of options trading, and I'll give you an example of the BlackBerry trade that I'm doing. So my goal for BlackBerry, I've accumulated about 1,000 shares so far. My goal is about 5,000 shares, real shares, and I'm also accumulating some calls on it, but leaps, right? Because I probably think this will go down $4 maybe. I bought it at 9, but that's why I'm buying shares, right? I think it could go down to 4. We'll explain it a bit after China, because I know we got about 30 minutes left. So let's look at gold. We probably won't look exactly at gold stocks, but this is the gold chart long-term, monthly chart of gold. One would argue that gold is still in a bull market. It's just taking a break, right? So I drew this line right here. I feel like this would be a nice area for accumulation. I don't think gold is going to go down much further below 1,000 because, well, we're going to transition into talking about China next, right? And you know that China has been fraudulently printing money, and we have proof, or M2 is the proof. Money in circulation is the proof. And at the same time, Russia and China have been the biggest accumulator of gold, right? But the biggest holder of gold is actually USA at 8 tons or whatever, I forget. And Russia and China are at 2 and 3 tons. I really forget the numbers, guys. But yeah, I don't think it's fixed supply. I don't think it's going down. So this is what it looks like. I think this would be a great time to consider gold, educational opinion only. All right. I wouldn't buy gold directly. I would probably buy a company, right? A gold miner, an organization who is trying to keep itself alive. And we
Why
could do
not
it.
just invest in the ETF?
The ETF will charge you fees for that convenience, right?
It's pretty low.
Yeah, it's all about share. At the end of the day, it's all about shares. I feel like how many shares can you accumulate, right? Let me show you why. So I have gold right here, right? We won't look at charts, but oh, right here. So we'll look at. I filter it out everything gold related, and I filter it from the biggest gold company down. The biggest one is Newmont Mining Corporation. That's 17 billion, right? And you're gonna look at the price, and you're gonna be like, what? Some of these are trading at $2, like this one right here. KGC, $2, right? And we're gonna go back and look at this one because Jim Simmons, a quantitative hedge fund manager in the East Coast, he has like 50 million shares into this.
KGC?
Yeah.
Wow. And he's one.
50 million shares. Every dollar up, you make 50 million. Every dollar down, you lose 50 million. But we're gonna look at the portfolio. But I would start organizing it this way and just reading about each company down because I think gold miners are extremely cheap. And let me tell you why. In the past 5 years, real quick, 2013, for 5 years, gold miners have been in a recession. What do you do when you're in a recession? You cut back, you make sure your cost is efficient. They had 5 years to repair themselves really well. They reduced any inefficiency in the business. Now, if gold starts appreciating, their sales go up, they're already efficiently capturing money, hopefully. So I'm pretty bullish on miners at this point. Did you have a comment, Dave?
Yeah, it's not like investment advice, but what part of your portfolio, percentage-wise, you think to dedicate to gold?
So I'm probably going to tell you I'm not like the traditional investor that's like allocating like 10% here, 5% here. It's a lot of discretion. I'm just doing it for like big wins that I feel are going to happen. It's the same way of how I'm treating how I treat this portfolio. You ask me what's my diversification, I really don't know. I just buy off discretion. Yeah.
The gold miner ETF is GDX. There's a junior gold miner which is GDXJ.
Yeah. So you could buy the ETF straight, right? I'm sorry, you were talking about gold, pure gold ETF versus gold miner ETF.
No, I was talking about minor.
Oh, okay, yeah. So that's
Those two.
yeah. So maybe you can get a dividend out of that if some of them are paying
That's
dividends.
very low.
There's no difference.
Yeah. Well, hold on. So guys, so what I learned about dividend investing, right? There's two types of dividend investors. One who looks for like the highest yield, and one that looks for the lowest yield. Think about that. You look for the lowest yield because it's going to grow.
Well, you can buy South African gold stocks.
Yeah.
They have very high yield, like 1-2%.
So I found the trick is not to look for high yield, right? Because they're going to cut dividends. I'll give you an example. GE, man. Yeah, that was a crazy cut. But yeah, so I realized like you want to find a beat down stock. It could pay dividends, but you anticipate sales and earnings are going to grow, and then they will eventually release more dividends. So you get the appreciation of dividends and capital gains. Beautiful.
Or you buy,
Huh?
or you buy a week before the X stage, and you get the.
Oh, there's that too.
dividends.
There's that too.
There are also a lot of companies that will actually track the dividend companies, and they'll go ahead and categorize them like dividend aristocrats,
Yeah.
where they actually have so many quarters and quarters of either having the same dividend or increase in dividend.
Yeah.
So and then also in relation to their balance sheet, so they kind of get the value of the dividend, not just for the right now, but what they've done in the past 30 years.
Yeah. So let's put an effort to start looking at gold more. I'll probably listen to more earnings calls. Some great features about gold. A lot of the people who work in the gold miner industry, they're buying the shares. There's a lot of internal buying, insider transactions. So that's good to see, because they should know more about gold than us. Global macro clearly explains if we remove money, what do you think when the U.S. raises interest rates, they're taking money out of the system, right? Why are they doing that? Well, if markets tank, what do you think they're going to do next? They're going to put interest rates back down, print more money. If that's the logical step, or that's the historical, mechanical steps that they've been doing. So if they go back to printing more money, what do you think is happening to gold at a fixed value? You're either in gold position or dollar position. You see what I mean? So I think it sets up pretty well in the next market cycle. So we'll see. A lot of opportunities. And we'll look at a billionaire's holdings right here. So Jim Simmons, does anyone know Jim Simmons? We looked at him before. I'm going to pull him up again. We're going to look at his live portfolio. This is Jim Simmons. He's managing 91 billion. How do you manage that much? Well, that's a lot of money, right? And so I went into his portfolio and I just, we'll categorize it by shares because I want to see what is your most bullish position, right? I don't do dollar amount, I do shares.
Your screen's a bit fuzzy, by the way, again.
Is it? I apologize. Yeah, so this is his portfolio, Jim Simmons, managing 91 billion. And the highest amount of shares he has is in a company called KGC. And KGC is gold. Now, this is all for educational
This
purposes.
was 6 months ago.
Oh, he has GFI too.
Yeah, probably 6 months ago. I don't think he liquidated. I think his view is longer term from his type of trading investing. Is it clear for you guys?
It seems fuzzy on the middle, but focused on the right.
Is that okay for you guys? Or should we-
Better.
That's fine.
Okay. So KGC, we could continue to monitor like who's holding these positions, but I'm not gonna make it like the one decisive reason for me to take a position, right? I want to further do analysis. So he's accumulated 54 million shares in a gold company, Kinross Gold Corp, right? It's a $1 billion company, so it's mid market, or it's considered small cap. It's a small cap, if I recall correctly. 54 million shares. What do you guys think? Let's look at the chart. Oop. KCG, was it? KGC. This is what the chart looks like on a monthly level. Not a bad. I mean, picking bottoms is extremely hard, but for a guy buying 50 million shares, yeah, I mean, for me, I want to try and piggyback off that, especially when it's only $2 a share. It looks very speculative, right? It looks very fearful, I admit. But this is just one of the largest shareholdings for a respectable money manager.
Yeah, but actually, most of kind of other stocks in his portfolio are beaten up too.
Yeah, so yeah.
Some of them recovered like
Every gold position is being up, right? So IAG is another one. IAG, GFI, GSS, BTG, right? For time's sake, I probably wouldn't look at all of them. They all look the same. They all look like this beaten down one right here. The reason why I like it is because it's a $1 billion company. It's not like a penny stock. This is like a real organization who have like specialty in mining gold and stuff.
So are those equivalent to investing in gold as a category?
I think it's the equivalent of investing in a Coinbase.
Coinbase for gold.
Coinbase, yes, because it's a miner, right? So remember why I said they had 5 years of a recession for their industry recession. They repaired themselves, cost efficient. Now as price of gold expands, it goes up. Every unit that they extract or whatever business they're in, or even if you're a complementary business where you provide the tools, you get more deals. Deal flow will increase, right? It's like oil, upstream, midstream, downstream. And I tend to forget these things, but like upstream is more close to extraction and stuff, and then midstream is like infrastructure, and then downstream is like delivery to consumers and stuff.
Which are these?
So let's think of gold, of like upper stream gold, midstream, downstream. I don't know if they structure it that way, but if the upstream gold starts, the value of gold starts going up, and they're pulling more gold. Well, the infrastructure, midstream and downstream, the consumption, all that will increase as well. So the deal flow will all bleed into that. So I'm saying the main thing to watch is gold prices. That's really it right there. Same thing with the main thing for oil companies would be watching oil prices, oil futures. So look at GC. GC is the ticker symbol for /GC. It's the ticker symbol for gold futures. Man, I talked a lot today. Well, let's keep going. So I really want to talk about China. That's probably the best part. That's the cherry on top for this discussion today. Any comments on gold about the what I think or what I'm seeing from a global macro perspective? You guys feel like you would consider a bullish position, or you feel like it's going to go down?
Can I just ask, if you felt that the value of gold as a commodity was going to go up, is that equivalent to buying those securities?
Yeah.
Okay.
Yeah, because those securities derive its value from the value of gold.
Okay.
That's what I was saying. You got a comment or?
Yeah, I think it'll go up, but
But
I'm hesitant because I like taking sniping opportunities.
Oh, you like the shorter term?
Because all the volatility.
Yeah, yeah, so the different trading styles, Chris
Yeah.
is more of a very short term, few days, I think. I'm more of a,
Sometimes a week.
I'm more of a, what's a big move, and then I'll size up with leaps on options, because that's what I've been doing in the simulator. So that's more of my style. And then we could short penny stocks too, that's another way, because today's the advanced discussion, right? Anyways, gold miners, so I think that's pretty much it. We'll conclude at that. We have about 30 minutes left. I don't want to like hold you guys back too long. Gold miner economics. So let's just read this real quick. Gold has been performing poorly since 2013, but still in a long-term uptrend, as you saw in the chart. Gold miners, okay, we already read that. Basically, we can assume that they have transformed to operate very efficiently with the depressed share prices. If you think about it, it's similar to aggressive bull markets with irrational spending and premium acquisitions, right? In a bull market, you see all these VCs acquiring businesses at large premiums. Most recent one, IBM acquiring Red Hat for a 63% premium.
Yes.
Yeah, I really like Red Hat. Like I was eyeing Red Hat. We talk about Red Hat's application software. I'm big on software companies, right? Enterprise software. They just bought it out. So now I know I have to buy IBM later. Not now, later. Because they took on such a huge economic stress. Most gold miners probably have negative gross margins, but this is expected, okay? If you look at their underlying financials, it's expected. As gold prices appreciates, I think those margins will expand, which is good. Okay, all right, that's enough of gold and Bitcoin. Let's talk about China. This is probably the most interesting part of it. I'm bullish on gold and silver. Naveed said that. Oh, Raj wanted me to, I don't know, Raj, I don't know if I would want to pull up your address on home. Maybe we could do this offline. We'll do this offline for property radar. We'll return to it. Sorry if I didn't see your message earlier. I got caught up in the discussion. So the most recent Real Vision, we talked about this last week and I was going to share with you guys. This gentleman right here, Miles Kwok, also known as, I can't pronounce his Chinese name, but Guo Wen. Yeah, so he's a Chinese billionaire. He's known to be in commercial real estate development, and he ranked up in the Chinese economy pretty high. And some of his, some of the things that he said, he has a YouTube channel you could subscribe to, but I think he just speaks in Chinese. But his main goal of that YouTube channel, if you listen to it, he said that at this age and this net worth, being a billionaire, no material things is of interest to him anymore, right? And the only thing that he cares about now is helping his country by sharing this fraud at the upper echelon. So he spends his days on YouTube as a billionaire talking about all the shady things that is going on in China. And in this interview with Kyle Bass, who is also a money manager, I think managing about 1.97 billion in funds. Great conversation because you got someone credibility asking very strong questions to another gentleman who's seen it firsthand. Now, real quick, a little digress to give you Miles Kwok's development. He developed let's see, what was it? Olympics. This was his development. I was just looking at this for fun because I thought it was pretty interesting. Let's see, development. So he got banned from China. So he developed this building, right? It's
Oh, God.
this building right here.
The Donald Trump haircut.
Wait, hold on. What? Pangu Plaza. That's what it's called. Pangu Plaza. So yes, he developed this building right here. It looks massive, right? Just wanted to show you that real quick. So anyways, going back to it. So in his discussion, he said that if you decide to rank up in China's economy, if you don't roll with the big boys and how they operate, you either get killed or go to jail. That was in his words. And at the end of the session, he made an extremely speculative statement. Now I'm not trying to provoke anyone, okay? This is what I found interesting. I'm just sharing it with you guys from an educational standpoint. But he speculated the ex-CEO Alibaba, Jack Ma, in about a year's time will get assassinated or put into jail. And I was like, whoa, that's kind of crazy. Reason being is that they most recently, he resigned, as we all know, right? But in this gentleman's words, he said that that guy was forced to sign over his ownership into 5 unnamed individuals in China. And those unnamed individuals, from his speculation, is the CCP, the Communist Party of China, the Chinese Communist Party. So extremely speculative, extremely provocative, but that's kind of like the speculation on that. Now, why do I want to talk about it? Because the insights that I got from him that were very interesting to me was the economy of China and the fraudulent spending or printing that they did. And we're going to look into it for a little bit. I guess I could give you a little quick 2-3 minute intro on who he is. So you'll also notice I grayed out some of the areas right here because I didn't want to talk about it. But this was all part of the notes that I took when I listened to it like 4 times because it was that interesting to me. But let me show you this quick video right here. So just 3 minutes, okay? Bear with me. A little intro onto who he is for people who don't know. So they're going to give you like a little introduction, but obviously the video will show you like the little lifestyle.
Michael Moynihan.
I'm gonna grab some water too.
How are you?
Actually,
Where come you? Thank you. It's a nice apartment. Is it okay if I look around? Yeah. Show me around a little bit? Yes, okay. No problem.
This isn't exactly what you'd think exile looks like. There's nothing run-of-the-mill about fugitive billionaire Guo Wengui. The real estate tycoon, who goes by the English name Miles, has spent the last 2 years holed up 18 stories above New York's Central Park, drinking his coffee out of crystal glassware and live streaming incendiary accusations against high-ranking Chinese officials, sometimes while working out.
When did you buy this apartment?
so that's a little introduction, okay? So if you guys think about it, if you were to rank up into the economy, eventually you get into politics. Example, Trump, maybe? I don't know. It makes sense because at that point you start to see it. You can't get any higher than that. But going back to it, so that's the intro on who he is. He gave a lot of information on China's economy, so let's jump right into it. At this time right now, there's a huge wealth dispersion in China. What they claim on their GDP is probably not accurate, according to him. And that really shocked me, because I thought, some of these, there are great companies in China, don't get me wrong. Ant Financial of Alibaba stock, Tencent, Baidu. I'm bullish on those. But I learned of like the corruption in China. Now, I'm not trying to speak down on China or anything, but this is, of interest of recent. So if you rank up in the economy, you either go to jail or get killed. Economic statistics, definitely not accurate. The 4 main points that he pointed out and revealed to the audience that it's not accurate was really, number 1, M2, the cash in circulation, right? And this is a chart right here of M2. Over a period of 2015 to 2018, I guess, is that right? No, past, I don't know how many years, we'll play the video, I'll show you in real time. The Chinese people increase a lot of currency supply, right? And let me put my mouse over this and annotate it real quick. So this is what it looks like. So keep in mind, I told you guys, every sovereign prints money, and when they print money, fixed assets go up in value, real estate, gold, etc. Let's look at the U.S. Let's focus our attention on the U.S. real quick. USA. So this is national GDP, basically our performance number. This is currency in circulation. In the video, when we watch it, as they increase the money supply, M2, so will GDP increase, right? But if you look at China on the flip side, they increase the money supply, right? But why is the performance not there? They increased it by 28 trillion. You increase it so much, and you don't let the people take the money out of the economy. So what they did was they closed down the economy, and they just printed in their economy and not share it with the rest of the world. And those are the accusations that he's making. And I was like, wow, that's super interesting. So let's look at the video. I'll play the video, and then I'm going to go grab some water, just because my mouth's getting kind of dry. And you'll see the video. And then we'll come back and let me know if you have any questions on that. So 38. So let's play it. So he's going to show you the video, and you'll see the money supply travel up. And
taken
first of all,
us to the
did you
place
guys
that.
did you guys understand what I was explaining? The circulation versus the GDP. The concept is if you keep injecting money into the system, GDP should expand, and that's good because there's more consumption, right? But now they're printing more than its expansion. That's the crazy part. So let's look at
Brought
it.
you and I together.
Yes, that's
Right?
correct, yeah.
You came to this conclusion.
Make
So let's start at 38. Oops.
a fake economy.
They have
This
made a
is
fake
the pen.
Okay, so it's gonna be about 2 minutes. I'll be right
I
back.
give you answer. Nobody can give China economy go to stable, reliable, impossible. They now is jump in. They cheated the world. They make a fake economy.
They have
This
made a
is
fake
the enter the currency. Then either control the currency, move to outside.
Yes. So you've taken us to the place that brought you and I together.
Yes, that's
Right?
correct. Yeah.
You came to this conclusion long ago, and you're right. I think you're right, of course, because you
Thank
agree,
you.
you agree with me. So
You
therefore,
can
you're
earn
right.
money.
So this concept of two currency worlds is one that is lost on many people.
Yeah. Oh.
The RMB economy of China is internal,
Yeah.
and the economy of
Yeah,
China
internal
in
worlds.
dollars is external.
Yeah.
And they're desperately in need of dollars because that's how they trade with the rest of the world.
Mm-hmm.
What was so compelling when I met you, the most compelling thing that you showed me was the chart of Chinese M2,
this is it
the
right here.
moving graphic.
Yeah.
And we'll provide that moving graphic to the Real Vision audience separately in this video.
Printing of money
But more importantly, Chinese M2 has grown from $1 trillion worth of RMB
Yeah.
to, as you say, $30 trillion on an economy of 12.
Yes.
They've printed more money internally
Yeah.
than any one country in the history of the world as a percentage of GDP.
Yeah.
And as a percentage, as call it M2 growth versus GDP growth, nothing has ever come that close.
Yeah.
So they've created a false economy of RMB and the exchange rate in dollars. So you took us to another place. You took us to Hong Kong for
So isn't that interesting? They printed 28 trillion on a performance of 13 trillion GDP. So that's an example of like, and then when we looked at it in technical discussion number 70 or whatever, we were looking at gold. We saw the biggest accumulator of gold was China and Russia. So I mean, like in the past year or whatever, I forget. I could pull up the charts, but kind of lazy right now with that. So what can we do as average Joes? We should buy some gold, maybe. Not a recommendation, but yeah. You guys have any comments on that, or you guys feel kind of like, or like?
I thought you were gonna say, well, short China.
So that looks like an opportunity because gold is rallying and it hurts emerging markets, and China's categorized as emerging markets. If you look at the Shanghai Composite Index, right? Let's look at this. So we can look at the EEM, which is everything emerging. It's already happening, right? So this is the year right here. So beginning of the year, since the beginning of the year, it's already been happening for emerging markets. If you were to look at Shanghai Index directly, you probably missed the bulk of the trade, right? But I think it could probably go lower at this point. It's already below the 200-day moving average. So I'm looking at Asher, it's an ETF that tracks the Shanghai Index. This is the performance from February in the year all the way down till now. Crazy, right? So I think that trade kind of happened already. I didn't know about this stuff until now. You know, I thought it was good. So that's where I came back to, I think 4 sessions ago, where this is an example of how sovereigns could rob people of their money by you know, printing more money, increasing real asset value, and decreasing the value of the currency, but at the same time they're accumulating gold. The sovereign's accumulating gold and printing. That's like double whammy. That's kind of like, you know what I mean? Does anyone get what I'm saying? Or like, it's like, whoa, your government is buying gold and devaluing the currency that you're playing on, that they issue to you.
Not at all, because China is export-driven economy. They want their currency to be low, to be
Yeah.
able to sell to the rest of the world.
Yeah.
Unlike America, which is kind of...
So the reality of that is it's a lot lower than what currency prices reflect. That's what I'm thinking. Now I'm not a super global macro expert, right? I only like started reading about it aggressively for like a year But that's the GDP. So as you can see, the U.S. This really made me appreciate like accumulating U.S. assets and working for like U.S. dollars, right? Because you're in like a legit system, or at least you guys feel the system's legit. maybe start there and then ask the next question. I think the regulation system, the legal system is great. The financial liquidity access infrastructure is great, and yeah, this is what we're seeing around the world. So some comments on this during that discussion. Now let's go back to this. So 4 points to look at for proof, right? M2 was what he said. The second thing to look at is the personal interest groups. Who has interest in doing this? And he basically said the CCP. And then number 3, bad banks. He said 45% of them are doing fraudulent lending. An example was that he has a friend, a commercial real estate developer friend, and they were chatting. His friend gets a call from a bank saying, we will lend you, I forget, $2 billion for a commercial real estate development, but we want 35%. And then his friend gives him a call and says, hey, does this make sense? And then Miles said, don't do it. So there's been, he thinks there's 45% plus fraudulent lending. So if there's lending, that means people are equipped to borrow for buying a home, right? Asset prices inflating. You're going to see all that. So do we see a lot of towers put up in China as of like, maybe in the past however many years? Yeah, quite a bit. Shanghai's. You see the Shanghai before and after? Anyone? Shanghai before, Shanghai after? Before and after. So this is a pretty interesting picture. I geek out to stuff like this.
Cool.
Yeah. So the way I look at it is, I apologize, okay, guys. I don't want to like bag on like China's economy or anything. It's just this is what I listened to 2 weeks ago. But yeah, that's the before and after for Shanghai. And then the fourth thing is forex exchange. Chinese money cannot move outside. Fake economy, printed money stuck in China's economy. Pretty interesting. They talked about this concept of world of two currencies, where there's an internal RMB and then an external trading RMB. And I think that's what we were talking about just now, David. Like, they want to keep their currency low, but which currency are we talking about? There's two worlds of it, is what they discussed about that interview. Increased money supply, M2, means increased fraudulent lending. All Chinese banks are at risk. This is what he talked about. These banks right here are the top banks. They're at risk, according to Miles. These banks work on enriching Chinese leadership and laundering money. And it got really interesting because he started talking about HKMA, Hong Kong Monetary Authority. So they were saying, well, how are these leaders getting the money into their pockets? And so it's something to do with Hong Kong's monetary authority, and that's where the money laundering happens. Again, guys, I'm just speaking to what I hear. I'm not, I guess it's a very sensitive topic to talk about. So let's move along. So to conclude, right, I guess I won't talk so much more on it. I feel kind of weird talking about it, all right? He feels that a revolution is occurring in China right now. So with this bear market happening, there's gonna be social economics happening out of it. Yeah. Okay, all right, well, let's talk about something else. How about that?
Well, we have the election coming up, of course, on Tuesday, so Monday will be the day of speculating what will happen. Tuesday will be assessing what the impact will be, and then Wednesday, Thursday, Friday will be a million views on what this all means.
Yeah,
So
yeah.
what's your thought on the impact of the election overall in terms of the overall market?
Okay, so increased volatility. That's it. That's all I think for the election. But okay, I won't talk about this topic. To me, I feel like it's a bit sensitive. I'll be honest. So it's a bit sensitive to talk about. Maybe like offline, one-on-one, if you guys want to talk about it. But in a crowd, probably not. So I apologize for that. So let's jump to the next segment, the final segment, and we'll call it a day. All right. My most bullish stock, BlackBerry. Yeah. So BlackBerry, did you want a quick highlight of like what they do, or anyone know anything about BlackBerry, where they're located?
I used to work there.
You really?
I used to
Like which phase? Like BlackBerry mobile phone phase?
Good technology was acquired by BlackBerry, and it actually had competing technology.
So what year?
Well, since I work there, kind of my view is extremely negative. But again, every time you know the details,
yeah.
it's really.
So my question to you is, did you look at it in 2013? Or did you work there in 2013? Or after John Chen? When did John Chen come on?
2010 to 2013.
So we're talking after now. So 2013 was when John Chen joined. Let me give you a little quick overview. So John Chen, well, let's see, where should I start? Let's start right here. This is what, no, let's do the financials after. Let's start with the leadership. John Chen. John Chen is a Hong Kong businessman, successful track record. He invested in Sybase, which later got acquired by SAP, right? And I think he started at Sybase for maybe, when it was worth like 100 million. He flipped it for 6 billion, if I recall correctly. So he has a successful track record of flipping software businesses, and I'm big on software businesses. So he recently, in 2013, took a position at BlackBerry, and you know, I'm just kind of doing my research. I came across this other gentleman, a Canadian billionaire. They kind of connect this guy with Warren Buffett as the Canadian Warren Buffett, but I went ahead and looked at his portfolio and also this video. So maybe we'll start off with his portfolio. This is what I see. So in his portfolio, Prem Watsa, this guy's managing 1.25 billion. His biggest position is BlackBerry. If you're a billionaire and you have 1.25 billion, would you hold 450 million in value or 50 million shares? I mean, like that's a key indicator or giveaway for me right there. And after I did an analysis on BlackBerry, I got pretty darn bullish. So after you left, John Chen joined in 2013. He turned the business around. If you look at the financials, right? Total, let's see, let's start with the stock price. This is the stock price, the green line. It went all the way down 2013, and then just went sideways for the longest time, right? And then just recently, it's been going up. What happened? So let's look at the first one. Let's look at the balance sheet. Their balance sheet is the yellow one. So balance sheet started declining, which is typical, right? But now it kind of it's kind of sideways now. So we know the balance sheet is okay. The best part for me is the gross margins. It's at 76% right now. Every $100 they sell, they make 76 bucks. This was coming from a previously about 50% margin, 60% right here. So their margins are expanding. Their balance sheet is stabilizing at 2.5 billion in cash. So he has money for acquisition. And so if John Chen's a great investor, I'm assuming he's going to go out there and acquire like really great companies. So that's why I'm feeling pretty bullish about this. I guess you could say majority of the investment thesis is that I believe in his investment capability. Net income is slightly pointing up. So that's what I'm seeing for the underlying fundamentals. Going down to the leadership, this is Prem Watsa. I mentioned that again. Billionaire with the biggest position being BlackBerry at 46 million shares. It seems like these money managers kind of peak out at about 50 million shares. I haven't seen one that would acquire more than 50 million shares just yet. But that's Prem Watsa. So let me give you a little short clip. It'll be like a minute on who Prem Watsa is or why he thinks BlackBerry is good. And then we'll call it a day. Does that sound cool? Because I think I gave you guys a lot of information. It's just kind of like digesting. So let's see.
Canada's a wonderful country. I came here 46 years ago, and anything I've done.
Okay, right here.
Canadian loyalty or be an example of kind of.
People around me that'll stop me.
So BlackBerry wouldn't be an example of kind of Canadian loyalty or old friendship?
BlackBerry I got to know through the founders, and they had requested me to go on the board. And the reason we put a lot of money on in that company was because of John Chen. John Chen is an outstanding executive, long track record. And I met him just like that in San Francisco. And it's like you and I are chatting. And he had a terrific turnaround at a company called Sybase. And then he says, bought every BlackBerry that existed. And I really don't want this company to go down. So I said, would you look at perhaps joining the company? And he said, I got to talk to my wife, but if she says yes, I will. And she said yes, and he joined us. So it was John Chen. If he hadn't come, we likely would have put any money.
And is it going the way you had hoped it would go?
It's funny in the tech business. It's, you have all the downsides, of technology, something.
So we'll close at that. Let me see real quick, NPD investor relations. So have you looked at the recent investor relations, David, on BlackBerry? They're targeting, so now that we know there's a billionaire backing it, we know John Chen's the leadership there, we know that gross margins are expanding, we know balance sheet is good, right? They got money to acquire great companies. What is the business model? They transition away, I'd say 80% to software now, away from hardware. So one last report and we'll call it a day on that. Let me see if I can find it real quick. The annual report presentation.
Well, let me put it this way, BlackBerry miserably failed with hardware.
Right.
For the last like 7 years.
Right.
That's
True.
not exactly transition. It was just, I guess, there was a gun at the head of the CEO.
Mm-hmm.
If you do it, you're fired.
The annual report.
But yes, they have great potential. They have money, they have.
So what I wanted to show you was a chart. Okay, this is it right here. So let's look at it real quick and we'll close it out. This is it right here. So our strategy is working record-breaking financial achievements. They're moving away. They're increasing in the enterprise space. So that's who their target is selling. So when I hear that, I like that. I like the fact that gross margins we're at 46% in 2016.
It's not organic, that's acquisitions.
Acquisitions?
Yeah.
Well, that's the whole concept. They're flipping the entire company now. It's not what physical BlackBerry used to be. It's cybersecurity
You know,
BlackBerry.
when you say Salesforce is great, okay, I don't like everything, but Salesforce grows mostly organically.
Yeah.
With some acquisitions, but in general, there is kind of power engine which propels it forward. With BlackBerry, original business, security, communication
Right.
actually is going down. So they need to buy new stuff to compensate for it.
Yeah.
So it's like seasonal.
The way I categorize this one is not your typical buy shares, momentum play goes up. I categorize this one as a distress flip. It's a pure flip. This is not, the BlackBerry that you left in 2013 it's going to be a different BlackBerry now. That's how I'm viewing it moving forward. And it's one of the most highly looked at, I'd say, among money managers right now. It's not just, what's his name, Jim Simmons not Jim Simmons, Prem Watsa. Jim Simmons is also holding a position, about 2 million shares. So this is, let's close out with the charts, okay? So I wanted to share with you the EOT, what they categorize it. Enterprise of things, that's the market opportunity. But let's just look at a chart and then call it. This is what I'm seeing in the chart, guys. So this is 2018. It's in a downtrend still. But I'm accumulating shares here in case it doesn't go down any further. So I'm taking advantage of this market pullback. If we do have a recession, I think these shares could go way below $9. But that's why I'm buying shares. My leaps that I'm looking at, it was good info, thanks. My leaps that I'm looking at 2021. And they're selling for $200 a contract. So, you know, maybe just put in like 10, 20 contracts for now. And that's pretty much it.
Well, maybe someone could buy all their IP and then roll it under a different brand, just the BlackBerry stigma.
I honestly think he will acquire winning companies with that $2.5 billion in cash, and the margins will just expand from there. Or they're going to sustain that 76% gross margin. I mean, I guess I believe in this guy's management. Okay, guys, I think that's the indicator. Okay, well, I apologize again for that awkward, topic. We probably won't revisit politics or crazy politics. We'll keep it to money management.
Be curious though next week to look at what took place on Monday versus Tuesday versus Wednesday.
Yeah.
These sort of before, during, after, and see what the overall market did.
Yeah, yeah.
If that's even a factor.
Yeah. All right, people online, another session. Hope you guys enjoyed it. We're gonna close it out.
How often are you doing this now?
I do it once a week.
Oh, really?
Yeah, I've been doing it once a week since.
Excellent meeting.
Hey, thanks, man.
When did you move here?
4 months now, I think.
Okay.
Yeah, it's been 4 months.
Yeah, so basically.
Do you like this location better, or
Oh, yeah, it's more convenient for me.
more convenient?
Yeah,
Okay.
I'm in Los
Hey,
Angeles.
thanks, Chris. Yeah, so I'm just, like I said, I keep running it. I guess you could say goods coming out of it. I meet a lot of people, meet sponsors, improve my investing, and just kind of go from there. Nothing else to do.
I just feel like
I'm curious about that
for me, it's like S&P.
real estate thing where you're,
Oh, the property radar? Yeah.
cold calling people.
So that's just as a real estate agent, though I did demonstrate a cold call in here once. you guys want to see. So,
So are you actually drumming up sales that way?
leads for now. I just started 4 months.
I mean, you know, are you actually convincing people, hey, sell your
No,
product?
that's illegal. I'm not convincing. I'm calling under the assumption that they feel the economics, and I'm just asking them, have you thought about selling? So it'd be like, hey Maureen, this is Kay, I'm with Keller Williams, or I would say, most of the time I say, hey Maureen, this is Kay, I'm a real estate investor, I wanted to reach out to see if you had any plans to exit your property in the next 2 or 3 years. And they're like, yeah man, the market's like kind of scary right now, I'm thinking about maybe in 6 months. If they say 6 months, 10 months, I pipe it into our CRM and then kind of go from there. So generate that list. This is the typical business building. So if I were to do like a meetup for business building, how to do sales, how to generate pipeline, that's essentially what it is. Yeah. Are you a business owner or like have you been one?
No, actually, I brought up Roseville because I'm trying to move up there.
Oh, you
And
are?
I asked my agent, why aren't you canvassing neighborhoods for me?
Yeah.
And she won't do it.
Yeah. Wow.
Are you gonna stay?
Each agent is actually, they operate very
We'll
differently.
do it up there, maybe down here they will, but in Roseville,
Wow.
Yeah.
I guess it just doesn't pay to do that.
Yeah. I mean, down here it's like the transaction fees are pretty lucrative. Up there it's just, really?
Yeah.
Yeah, that's the major
It's
difference.
pocket change.
Yeah. So people online, I'm going to turn it off and call it a day. Thank you so much for attending. We had about 13 people online today. Yeah, it was a good session. But again, I apologize for that awkward talk. But we're not going to revisit that for me.
I think it was awkward, I think it was lack of understanding or interest.
Was it?
I think that was political.
Okay, all right.
People were offended. The only people who would be offended would be Chinese national, you know.
Well, I don't know if you noticed, we had some in here.
No, not many.
Oh, yeah,
But
well,
they
yeah.
live here now, maybe their attitude's changed.
Okay, so people were saying things. All right, guys. Thanks so much.
Yeah.
You guys want to chit chat? Chris, you want to chit chat for a bit, or you gotta go?